So Tesla absolutely crushed delivery figures, but that's not the big secret that this actually forecasts, folks. Let's take a brief look at the Tesla delivery figures, and then we'll touch base on what I think Wall Street is really missing behind these numbers. So take a peek at this. Here, Tesla Q1 delivery figures. We have zero production for the S and X. That makes sense though, because we have the massive refresh going on with the S and X, where we're changing the steering column to that half wheel. We're changing the dash for the S and X. We're basically making the S and X look like the Model 3s, Ys, and the Cybertruck. And this is really condensing the amount of parts the vehicles are expected to use and have, which makes sense. It just makes Tesla more efficient. This is one of the reasons Tesla is so good at having such a high margin. Remember, I personally believe Tesla's margin is going to settle down around 28%. Elon Musk thinks they can get their gross vehicle margin to around 30%, and Cathie Wood in her latest projection thinks that Tesla could get to 40 to 50% gross vehicle margin, although she does include a lot of automation revenue from robotaxis. The point is, the more streamlined the production, the better. And this shutdown in Q1 of the S and X lines, production lines, is a huge investment in margin growth, profit growth for Tesla. So important. But what's Wall Street missing? Well, there are two things Wall Street's missing. One big thing Wall Street is missing is, first of all, the explosive growth of the S and Y is not just happening, but Wall Street is missing the fact that Tesla Fremont and Tesla Shanghai are both tooling up and expanding to get to 1 million vehicles produced per year. Right now, Wall Street believes these are just 500,000 vehicle facilities, and even though Tesla's talked about their plans to expand, Wall Street's been generally bearish on Tesla actually getting to not just these production figures, but having the right amount of demand for these vehicles, having enough demand for people to actually want to buy the S and Y without having to wait a long time for them. Well, so far, Tesla has not had a demand issue. Tesla has solely had a production holdback. And this blowout here of Tesla beating Wall Street's estimate of combined deliveries of 174,000 by beating it with 184,000, beating it by 10,800, is not just a sign that Tesla is ramping up their S and Y production quickly, which is great, obviously wonderful for the stock and the company, but it's also a massive sign that Tesla is on the way to potentially beating their expectations for the year. Now, publicly, Tesla has suggested they might hit 880 to 900,000 vehicles. But Elon Musk, just in the last few weeks, hinted that Tesla might actually have an internal target of 1 million vehicles produced this year. And if Tesla can produce 1 million vehicles this year, and actually deliver 1 million vehicles this year while still having to wait for more orders, Wall Street might finally realize, wow, Tesla is actually here to stay, because there are still so many Tesla doubters. Now, many of us watching this might think, wait, there are Tesla doubters? There are lots of Tesla doubters. So many Tesla doubters because mostly people get upset about the current price to earnings ratios at Tesla. But that's again because folks do not like to build in future potential growth prospects, because when you look at a normal company, we don't like doing that either, right? When a normal company, like let's take a look at, like, for example, Zoom. Zoom might have this exponential growth during the pandemic, but we expect that exponential growth to fall, or not, maybe not necessarily fall, but the rate of that growth to slow. Zoom might be here. They might be at that inflection point with their growth. And people see the same as potentially true at Tesla. They're like, oh, look, Tesla, you've had a great couple-year run, whatever, that's it. You're getting ready to turn the corner. It's not worth the multiple people are paying for you. But I think that's where Wall Street is so devastatingly wrong, in not realizing that in 5 years, Tesla might be producing and delivering 4 to 6 million vehicles, which really puts Tesla at delivering 184,000 this quarter. It really puts Tesla right here at the start of this S-curve. And so when we hear people complain, but Tesla's valuation is so high, it's because folks think the S-curve is coming to an end when we don't even realize it's just a beginning. And today's numbers are a big slap in the face, in my opinion, to the Tesla doubters. And it's not wrong to say that, hey, we think Tesla's going to miss. I mean, I thought Tesla was going to miss as well. They shut down S and X production. They had a fire. I mean, there were fewer days in Q1. There were lots of issues in Q1. Q1 is historically slower for car sales. So it's not wrong to think or to expect, Tesla might miss or whatever. But it's wrong, in my opinion, not to invest in Tesla solely because we believe, oh my gosh, but Kevin, the valuation is so high based on 2020 price to earnings ratios and multiples. It's like, well, when we look at the future potential of Tesla, the biggest mistake, in my opinion, is not investing in Tesla. There's a reason Tesla makes up so much of my portfolio, and it's because when I project out growth at Tesla relative to really any other company, Tesla is so young. It's such a baby compared to all of the others. In fact, let's go ahead and just pull up my Tesla spreadsheet very briefly. We'll look at my Tesla numbers, and I'll give you sort of a little reminder as to why do I think that Tesla earnings are going to be so bullish in the future. So just a quick little reminder look at this. Remember, Elon's now updated this to about 1 million. I'm at 950. I'll leave mine for a 950 here for deliveries 2021. My projection is we should be able to easily get to 4.8 million by 2025, and that's produced and delivered. I do believe the demand will be there for the Tesla, especially once full self-driving comes out. There will be no competition really for Tesla. We want to keep an eye on competition like Lucid and some of the other companies just to see who's going to be that potential number 2, because there will always be a very large and profitable number 2. I always think Android and Apple as just sort of our example. But anyway, if we go with revenue per vehicle, 40K, 4.8 million, we'll go through this a little quickly. We get to total revenue of around 235 billion. Note, I'm not including insurance here, robotaxis, semis, full self-driving. I'm basically collapsing all of that into the revenue per vehicle. So in my opinion, I'm being conservative by doing that because I'm not including as much revenue as we could expect. Bitcoin, all of these things. I'm just going to keep this very, very simple. We'll throw it in here, and we will include, though, 10% of vehicle sales towards energy. And that's mostly because the way I look at that is I think a portion of battery production is going to be carved out for energy. And to me, I think 10% going towards energy regularly is very realistic. We'll see. $19.2 billion for energy. That could be a little bullish, but we'll see. I do think overall I'm being very conservative, especially with just 40K revenue per vehicle, not even including, again, insurance, really the semi-bump, robo-taxis, FSD, all of that. You collapse all of that in here. I think that's a very conservative number. We go with margin, expense margin of 26%. By 2025, they should easily be at that 28%. So let's go ahead and put 72 in here for expense. 1 minus is 28%. That gives us some other expenses. Well, these are sort of the expenses. We've got expenses on leases, servicings, profit margins. I'm going to bump the tax rate, not the full 28%. We'll go to like 22%. Tax deductions and credits will help get Tesla, or help keep that down for Tesla. That potentially puts Tesla at earnings per share of around, with a net of 19 billion by the end of 2025, puts them at about an earnings per share of around 19.5 for the year in 2025 if these projections are accurate. The price today is somewhere around 660. So that means we're really only pricing at 37 times future price to earnings ratio. We're pricing today at 660. We're being priced at 37 times future earnings per share. But I believe that this in 2025 will still just be the beginning, or I wouldn't want to say the beginning. I think S-curve wise, will probably be pricing somewhere around here, because really I think we're going to start curving around 10 million vehicles. So 5 million, 4.8 million is going to put us about halfway there. We'll start curving later, whether that's 2030 or 2035, that curve will come. But anywho, it wouldn't shock me that once Tesla proves that we're at that 5 million vehicles, that we could easily be pricing at 100 times future earnings. We're not going to stay at 100 times forever. Once we start curving and we start getting to that inflection point, Tesla will mature and we'll start pricing for 30 to 40 times in the future. But that's maybe when Tesla's doing, 10 million vehicles a year, potentially as high as 14, 15 million vehicles a year, beating Toyota. And then we'll be pricing, then we'll also know how we get to price Dojo, the supercomputers over at Tesla. And we'll get to see the real impact of full self-driving. But at that point, in the long future, if we want to start looking at lower price to earnings multiples, we will probably be at 10 to 14 million vehicles produced and delivered. Who knows? Maybe that's bullish. But if I go with 100 at sort of a midpoint of 2025, by the end of 2025, let me change that here, 2025, I think it would be reasonable, and honestly, I think this is relatively low. It would be reasonable for Tesla to be worth somewhere around $1,757, and that would give you about a return on your money if you bought Tesla shares today of around 21.6%. Now, keep in mind, Kathy believes that this will actually be closer to $3,300 by the end of 2025, which really gives you a rate of return over those 5 years of around 37.9%, which is really incredible. So obviously, I wouldn't be shocked if we get to at least a 1,700 by 2025. But if Tesla gets to 1 million this year, we could end up seeing 1,700 much sooner as the market starts pricing in more of this growth. There will come a time, though. I mean, if we hit 1,700 by the end of 2021, I mean, at that point, it starts getting to the point where, we got to ask ourselves, okay, does it still make sense to invest in Tesla with new money? Because now we're just pricing in so freaking much future growth. People say that about today's price. I don't believe that about today's price. I start getting a little bit more nervous when we start approaching 1,000 and 1,000 beyond. 900 plus. I mean, there it doesn't matter. $100 here or there doesn't matter so much. But yeah, those are some of my thoughts on Tesla. To me, the earnings today, or not the earnings, the deliveries today are not about the deliveries today. They're about what they signal for the path we're on to get to this 1 million vehicles produced and delivered in 2021 and what that means for our trajectory in 2025. Thanks so much for watching. Hopefully this helps explain why I'm so bullish on Tesla, and I'm even using conservative numbers here. Thank you so much for watching, and folks, we'll see you in the next one.